Good evening to everyone calling in from Sydney, Australia. It's been a big day in Australia today in terms of what happened in our market. We had a rate cut yesterday, but our stock market actually went down. So huge day. But anyway, we're here to talk about emotions in trading, fear and greed. So welcome everyone to our discussion today. So I'll just go through the disclaimer as usual. I'm not a Forex trader, not here to give investment advice, but just here to talk about fear and greed in trading today. All right. So fear and greed, I guess these are the two big emotions, not just for traders who experience it, even in everyday life, we do have these two biggies in terms of feeling the emotions. Now, how do we deal with them though? Do we avoid them? Do we avoid this feeling in trading, particularly like some people use algo in trading or systems trading, taking out discretion, taking out one's emotions from the equation? Or do we work with it? Do we work with these emotions? Perhaps those who have been doing it have been a bit of a hit and miss. Or perhaps the third option, embrace and engage with these two emotions. Now, if we choose to do that, the third, embracing and engaging with the emotions, then we need knowledge. We need to understand how they work, where they come from. We need to trace right to the source. So let's get an insight into these two emotions today. How do we deal with them? How do they affect us? Or perhaps can we actually change how we feel? So that's what we're going to look at today. And then we're going to work through a few strategies that can move you from break point or being average to peak point. So we'll talk more about those different stages of trading. But what we want to do today is to really get deep into these two emotions. Now, the first thing with fear and greed is that befriend them. Now, the first thing we can do in befriend them is by understanding more of our brain, which is a 3-in-1 brain, really. I've gone through that in my first webinar, more about the emotional brain, the three parts of our brain, the old brain, or we call it the hindbrain, where our fight or flight instincts come from. These are our automatic reactions. And then we've got the midbrain, which is the limbic, where our emotions and memory lie. And then the new brain, which is what we're mostly used to, the cortex, which where we think, and the prefrontal cortex, which is the most evolved part of these 3-in-1 brain. And this part of the brain, the prefrontal cortex, is as if it's like the CEO of these three parts of the brain. It can regulate, it can override, it can basically be the boss of this 3-in-1 brain. Now, an easier way to think about our brain is we start from the old brain. If your hands were on a hot plate, instinctually you remove your hands from the hot plate in the event of feeling the heat from the hot plate. Now that's instinctual. You didn't need to think about it. Now, what if you had been burnt before in the past by putting your hand on a very hot plate? Now that memory and that pain, which has been now saved into your midbrain, is going to give you a greater instinctual removal of your hand from that hot plate. What if then your new brain comes into the picture and actually noticed that the hot plate is actually not that hot? The fire is, or the temperature is actually at a very low temperature. And you override that instinctual part of you of removing your hand by telling yourself, calm down, it's okay. It's not hot at all. It's just lukewarm. Don't worry about it. Even if you leave your hand on the hot plate, it's not going to burn you. So that's how these three parts of our brain come together to work together to give us a better way of dealing with situations. And indeed, in trading, that will be really what we will need. Now, let's look at the next bit of these fear and greed emotions. As we know, fear and greed I'm not sure whether you know this, probably you do, it's normal. It's normal to feel fear and greed. But the issue here is how much of it though? How much of it is normal? And particularly when it comes to trading, how much of it should we have fear or greed when it comes to trading? Now, the first thing that I want to bring to you is that fear and greed, both of these emotions, they're primal and they're universal. We all feel them, and it starts way back from the old brain, from primal stage. Now look at the animals here. You see that this one is attacking that one. The little doggy there has lack of control. But on the other hand, you've got the baby penguin here reaching out to perhaps the mom here and for survival. And the parent penguin here is being protective of its offspring. So these are all very primal instincts that we all feel. We fear when we feel a lack of control, like this one here. We fear when we do not have our survival met in terms of food, shelter, or stuff like that. Or when our safety is challenged, we feel fear. Or perhaps in this case, this animal here wants more. In our terms would be we are seeking for happiness, we're seeking for satisfaction or significance out of life. So these two emotions, fear and greed, really it comes from it comes from our primal instincts, really, of dealing with in situations where there's a lack of control, where we need survival, our survival instincts are challenged, or we want more out of significance or happiness or respect. In our case, for example, in trading, now, what can transpire to what we call greediness is a need for respect, for example, of wanting to be right. These can even translate to perhaps not cutting losses when we need to, or overstaying in trades because just to prove that we are right, we are not wrong, and the decision that we made initially was the right one. Now, this sort of need of being right, being having that respect or that significance in life can also reflect the state of the ego that we have in ourselves, not taking a position, for example, trading on paper instead of actually getting into the trade because we don't want to be wrong. We're afraid to be wrong. Or even we can fall into the space of being greedy, driven by fear. I call this follow, which is a fear of losing out, FOLO. This can come from the emotion of being envious, being competitive, and it drives us to the other side of the equation, as in fearful of losing out, and hence we become more greedy or to chase the very last dollar just to look better in the face of others. So these are the emotions that we feel. They are primal, they are universal. We all have them. Again, it's how much of it we display and is reflected in how we trade. Now, so these are primal and universal, but there's another part of it which is more personal. And this part of the emotion is conditioned in each one of us. These are preloaded data when we were born, perhaps through DNA from our parents. We are already preloaded with a certain amount of fear and greed in us. And this can be traced back to when I talked about the emotional brain the last time. Fear can be traced to the amygdala in the emotional brain, and the reward-seeking self of us can be traced to the NAC, the NACC, in our emotional brain again. So we have certain preloaded level of fear and greed. And then from there, we moved on as we experience life. We have knowledge, we live life, our background, our school systems, the things that we've learned along the way. Fear and greed, the emotions build up in us. And particularly, if there has been emotion that has caused us pain, for example, huge losses, or in our mind, significant losses, it may not be so in reality, but it may be significant in our brain or how we feel it in terms of emotions. And those kind of pain or memory of pains or memory of losses are stored in our memory bank, and they're stored deeper and into our long-term memory. And this part of the memory is in the hippocampus. Again, it's in the limbic part of our brain. It's called the memory bank of our brain. The more we remember, the more we experience losses or pain, the more these emotions will be brought up when stimuli trigger the fear in us. So these are conditioned. These are not primal and universal. These are on top of that. These are individual. These are our personal fear prints. Now, another part of it that is part of our personal fear print is based on our personality profile. Now, I mentioned the 5 factors before in my last webinar, and the 5 factors are also in my book and also on my website. You can go there and work out from the questionnaire where you lie in the 5 factors. We have all of these 5 factors, but in terms of the fear print, our individual fear print, and the pulse print, where we tend to be more motivated by reward-seeking behavior, it can be traced to our personality profile. Now, one, for example, who is high in extroversion, for example, has a more optimistic point of outlook in life, tend to seek more reward, want to seek more reward, and hence that's where the person will move towards. Or on the other hand, one who is higher in neuroticism, basically it just says emotionally instability, higher level of instability emotionally, and that person has the higher chance of having a stronger personal fear print. So these are the personal effects that can condition a person's individual fear print. Another factor other than your own preloaded data or DNA, your background and experiences, and the third thing is your own personality profiling. The fourth thing is about your own psychology makeup. All of us suffer from different forms of cognitive biases. One which is very popular is called loss aversion. You may have heard of that, as in a similar amount of loss is felt much more than the same amount of gain. So again, losses is saved into our memory bank deeper and is brought up more so when similar episodes rehappen in the future. So these are the factors that affect us and condition us in terms of how we fear or seek reward. So that's our personal fear and reward-seeking prints that we bring with us. Now, in addition to that, what we want to look at in terms of fear and greed is how do we deal with them right now? Now, with the majority, we are here most of the time. We are not aware of the cognitive biases that are happening, the neurochemical imbalances that are dominating, for example, the dopamine rush, the stimuli that affect us in that way, or the release of oxytocin, for example, the warm and fuzzy feeling that pushes into a trait that we may not, if not because of that, or stress hormone like cortisol that increases us to the possibility of breakpoint. Now, not being aware of that, that will then rob us of the chance of dealing with them, or being dictated by our emotions, like the fear and greed, not having the right proportion of fear and greed. What I'm saying is that it's not a total elimination of fear and greed, because we need some level of fear and greed, not just in trading, but is in normal life as well. If we don't have fear, then we'll be subjecting ourselves to all kinds of dangerous pursuits, for example. And if we don't have a certain level of greed or wanting of more, seeking of that extra bit that we want, or happiness that we want in life, then we wouldn't be pushing ourselves to actually go into trades and try to get more from what we have. So it's necessary. The fear and greed, we need a certain level of it, but is in the maintaining of that tension between the two emotions, the fear and greed, and causing us to reach our peak point. And that's the key, is in the holding of the tension of the two. And what we don't want is to be reactive, because once we experience an extreme emotion, be it fear or greed, we will be pushed towards break point. And when break point happens, impulsive decisions happen, reactive to stimuli, reactive to situations, and we make decisions under intense emotions. And then we revert to the primal instincts, the quick auto decisions that come up without going through the logical thinking. And logical thinking or rational thinking is unengaged when we are at break point. So even in that space, we don't want to be pushed into break point. We want, instead of being in the majority where we're not aware of what's happening, the level of fear and greed being dictated by the imbalances of our thinking or cognitive biases. Instead, we want to be at this level, at peak point, not trading with fearlessness. Neither are we fearful, but we want to push the limits when we can, but release when we know that it's enough. There's no more profit there to be pushed. It's time to let go, or stay in the trade when we need to, but we leave decisively when it's time to. So peak point is where we want to be in the flow, not occasionally, not hit and miss, but more often than not. So that's where we want you to be. And what we want to do is really to shift this whole diagram, the inertia of it towards this part of the graph, which is more towards the peak point. Now, in order to do that, firstly, we need to avoid break point. So to avoid the impulsive decisions that can be caused by both fear and greed, the frustrations that we feel in trading, the throwing of the towel. We want to avoid that part, break point. But also we need to avoid being the average trader. By how do we get there? By working with our emotions, knowing our individual fear prints, knowing our individual pulse prints, what pushes us, knowing the primal instincts, the prevalent fear and greed that we all have, and our personal ones, and not being caught out by cognitive biases, and work on building new neural pathways towards peak point. And this peak point here needs training, just as how this picture is. See, this lady here on the elephant, as we know, is not easy to be here, to be in the flow with an elephant. But in order to get to this point where in the flow, where you are the rider over the elephant, you are the boss of the elephant, you're managing the elephant, you need training. We need to turn raw, untrained, natural instincts that come with our emotional brain, the automatic, negative, unproductive reactions, or overly instincts towards survival, protection, and the wanting of more, turning them into more in the flow, empathy, reading of others, by engaging with our logic brain. Be the rider, overriding those unproductive emotions where need be, breaking those hardwired associations that have been built up, and consciously changing those neural pathways. Now, some of the points that stop us from doing all these, for example, self-doubt. Now, that's a very big one that keeps a lot of people in here, the average. Self-doubt is a big one because we don't back our own conviction. We are not going with our own conviction. Instead, we rely on other experts, for example. And the next big thing which is, make us stay in the average is the stories that we tell ourselves. That we can't, that you're not good enough, and hence we inject more fear into the whole equation. So those are the things that we need to manage by being the rider on this elephant, and then you will find that you flow better. You'll be able to reach peak point more often than not. And you will have more successful trading and enjoy your trading much more. So I'm going to leave it there for you to pipe in with questions. A person commented, I have fear to pull the trigger. Yeah, this is one big one for some. I think it might be helpful for you to find out the 5 factors for yourself. One of the factors that I find that can cause one to be apprehensive in actually getting into trades is the factor called conscientiousness. Basically, those who are higher in conscientiousness, what it means is that you are a very analytical person. Another way of looking at it is that you could be doing a lot of analysis, spreadsheeting all your trades, or using a lot of systems to analyze, but then you overanalyze to the point that you can't actually pull the trigger and push yourself and nudge yourself into the trade. So to balance that up, doing all the analysis and being careful and in depth in analyzing before trading, it is a good trade. It is advantageous, but when you do too much of it, and it's like paralysis in analysis. You can't pull away from the analysis and actually push yourself into a trade. So that's a very big thing. Perhaps that may be what is causing the problem for you. So you need to give yourself a bit of a nudge. If you have done all that analysis, all that in-depth research, then back yourself. Stop yourself from having that self-doubt. As well as the stories in your head that I mentioned, the 2 biggies that, other than the emotions that cause people to remain where they are and becoming average trader, or in this case, not trading at all. So these are the things that you need to be aware of, the stories that you tell yourself in your head and the self-doubt, not backing yourself. So most people get stuck here with self-doubt, telling themselves stories in their brain, not pulling the trigger. Yeah, it's all here. Last call, last question. All right, then we shall call it a night from Sydney. So goodbye, everyone. Speak to you next time. Thanks for dialing in.